Let's bring in the Chief Economist at Commsec, Craig James. Craig, while the stock market was falling, the dollar also was getting whacked pretty hard as well.
Yeah, the Australian dollar is falling against a strong greenback. So the greenback's basically strong against all major currencies and certainly is strong against our currency. It was only a couple of days ago we were at 66 US cents, now we're at 64 cents. Now this is the inevitable story about winners and losers. Those people who are planning to go away on overseas trips are not overly chipper, so when you have the currency down around about 64 cents US, but hopefully we get sort of a few more foreign tourists coming our way. It's also great news for our exporters, and at the current stage we've got commodity prices rising quite significantly. Gold prices up around about 15% in US dollar terms. In Australian dollar terms it's even more, it's sitting at record highs. So for the gold producers this is a good time. For the mining sector more generally. And then you've got stocks like CSL and ResMed, which gained in terms of their overseas operations. So, good news and bad news sort of comes out of this, but basically we're weak against a strong greenback, which is rallying because of the strength of its economy. Stronger than expected retail spending overnight in the United States. The expectation is that they won't get 3 interest rate cuts this year. Their economy is just too strong for that.
OK, I just want to go to one thing, because in the past, our Australian dollar has been hit hard when our current account deficit is massive. Well, at the moment, we've got a current account surplus, we've got a trade surplus, all the things that should keep the dollar higher. They're really there right now, and yet our currency keeps on getting hurt. So clearly something has changed in what drives our currency.
Well, it's the interest rate differentials which is probably the major story in terms of the change around for the Australian dollar against the US dollar. If you look at a two-year bond yield in the United States, 4.92%, so closed at last night, 3.89%, in Australia. So something like 100 basis points or 1 percentage point higher in the US than it is here in Australia. The same in terms of, if you look along the curve to 10-year bond yields, around about 0.5% is the difference there, but US is outpointing us, and it's outpointing us basically because their interest rates are higher and the economy remains strong.
And so is it just against the US dollar that we're getting hit, or is it just pretty much against the cross rates, most other currencies as well?
Yeah, we are holding up against the cross rates. If you look at the map of the US dollar index against the Australian dollar, it's basically 1 for 1. So it's the strength of the US dollar. It's basically pushing downward pressure in terms of our currency. But as I say, it's a good story to tell in terms of our exporters, particularly our gold exporters, mining more generally. And straight the way across the economy, so the hope is that the tourists will be coming our way, over coming months.
I'll tell you what, Craig James, always good to get your input, and many thanks for it today. The Aussie dollar obviously getting hurt right now.